A lot of people don't realize you can purchase a home with a reverse mortgage.
So if you've got a lump sum of money, you're downsizing, you want to purchase a home, you can use the reverse mortgage to purchase it, and then you don't have a monthly payment, do you?
You're going to put a pretty large, substantial amount down because if you remember, we're only going to be lending probably 30 to 45%, depending on your age. So we're going to
Okay.
put a very large sum of money down, but you're not paying full cash for the house. So this allows the person to buy maybe that $500,000 house for $375,000. So that difference is going to go on a reverse mortgage that's going to help fund that.
What if the best chapter of your life hasn't even begun yet? What lies within you is the power to live brighter, bolder, and truer than ever before. So welcome to Vivatude, where caregiving, connections, and career come into balance, and where your vitality, vision, and voice shines through. Because the revolution isn't out there, it's already within you. Welcome to Vivatude.
Welcome back to Vivatude. This is Kate Phillips. I'm here with my special guest, Rebecca Porter, and we are talking about reverse mortgages. So one question I have is, how much will they lend to you? I know we're going to get into who is this for, who is it not for, but how much will they lend to you, or how much could you have access to in a I'm calling it a reverse mortgage line of credit, but it's a home equity conversion mortgage is the accurate term, I believe.
Yes, for the FHA product, which is the most
Okay.
popular product. There are some other products out there.
Okay.
So, how much? That's a really good question. That's the biggest question we probably get from most people. So it's a little mind game here. Mind, you got to switch your mind around of how you think. It's not a 20-year mortgage or a 30-year mortgage. It's a life expectancy mortgage.
Oh,
So the younger you are, your life expectancy obviously is longer, right? The older you are, shorter life expectancy left on your life expectancy line. So they're going to lend you more money the older you are. But there's three things that go into of how compute into how they're going to lend you money and how much they're going to lend you. And that is the value of your home, the current interest rates, and how old you are. Those are the three biggest factors. So obviously, if the rates are higher, if you're not making a payment, the loan is getting bigger, right? So it's going to grow faster, that balance, if the interest rate is higher. And if your house values are more and you don't really owe, that's going to play a big factor in it. And obviously your age. So those three things together give us the loan limit amount. Okay.
hmm.
So that's important. And it's also important to know one of those myths are, oh, they're going to lend to me my whole house and I'm going to end up underwater. I've actually had people get mad because they're like, that's all they're going to give to me. So especially if you're younger, in your early 60s, mid 60s, they're most likely in today's market are only going to lend to you maybe 36% to 38%.
Mm.
So very rarely do we see that hit that 50% mark of the value. And that's going to be, in your 80s, usually when we compute that out. So it's really a conservative loan. And when we dial in and really look at those numbers, people are like, oh, and when we start showing them the amortization schedules, the light bulb goes on. Look how much equity you still have left. People get really stressed out about, but there's all that interest being added on. So there's many ways you can access that home equity.
Mm.
You can sell your house, right? And so if you do want to
Mhm.
sell your house and move into an apartment or something, let's figure out how much is that going to cost? Are you going to be independent?
Yes.
Are you just going to be in a regular apartment? Or are you going to be in a 55 and older? Usually those are a little bit more expensive, but you get a lot of benefits with those, right? Food and all kinds
Sure.
of fun stuff. But we want to calculate out, well, how much are you going to net off of selling your home? And how long is that going to last by renting? More often than not, your rent yearly is going to be more for many years of the interest being added onto the loan on a reverse mortgage, People are shocked when I show them that calculation and we talk about that. So, so your other question I know too, though, was, who is this really
Who is it?
for?
Yeah, who is it for? Who is it not for?
Right. So it's for those people who do want to age in place. Probably not a good thing to get if you know it's not going to be your forever home and you know you're going to move maybe within 3 years. Okay.
Okay,
So
okay.
then I would say, let's hold off and let's come up with a 3 to 5 year plan. And when you sell and you're going to right size or downsize, whatever you want to call it, then we can do a reverse for purchase. A lot of people don't realize you can purchase a home with a reverse mortgage.
Oh, let's say that again. You can purchase a home with a reverse mortgage. So if you've got a lump sum of money, you're downsizing, you want to purchase a home, you can use the reverse mortgage to purchase it, and then you don't have a monthly payment, do you?
You're exactly. So people are like, how does that work? So I'll give you a case study of a client who was going through a silver divorce. And she, I mentioned to her, well, if you really want to keep the house, have you looked at a reverse? She said, yes, there's not enough equity to buy them out. I go, great. Well, have you looked at a reverse for purchase? Because where are you going? She really didn't want to rent. And she's like, I'm not going to have enough cash to pay cash for something. She goes, what do you mean you could do a reverse for purchase? I'm like, yes, we can. So the way that works, you're going to put a pretty large, substantial amount down. Because if you remember, we're only going to be lending probably 30 to 45%, depending on your age. So we're going to put a very large sum of money down, but you're not paying full cash for the house. So this allows the person to buy maybe that $500,000 house for $375,000.
Or
And
then they don't have to worry about the mortgage payments.
Right. And so the rest, so they're putting down the 375 that they cashed out, but they're able to buy a $500,000 house. And that difference is going to go on a reverse mortgage that's going to help fund that and not have a payment. So that's how kind of, in a nutshell. Now, those numbers aren't exact. Obviously, it depends on your age. And we have to calculate it out. But it could be a godsend. I had another couple that was just moving from another state and they were wanting to buy on one of the islands here in Washington. And it was a nice, close to $900,000 house. And for their age, I think it worked out. With all their closing costs, they put down 623 and it was a little over 8. I think it was on actually the lower end. So they were able to keep that other couple $100,000 because they could have paid cash. But they were able to leave an extra $200,000 to $250,000 in their bank account. So the program is for those, right, that are looking at downsizing. Yes. Maybe they can't find a house and what they want, and they realize I can get the house I want. It's also for that person who they're in their house, they want to age in place. They know they're going to be there for 5 to 10 years. And we can come in and they can have more cash flow that allows them to do home repairs for all kinds of stuff, right? They're not able, they don't have to give up their house and go into a rental situation now.
Thank you so much. This has been so useful. I can't let you go until you tell people how they can reach you. And I know your phone number, 425-244-2400. That's 425-244-2400. Your email is rebecca.porter at nafinc.com. We're going to have all these in the show notes, and you've got just a few seconds if there's something you want to add on to that.
Yes. So I am Rebecca Porter. I represent New American Funding, go by NAF, New American Funding. I'm a reverse mortgage specialist and licensed in multiple states, Washington, California, Arizona, Oregon, soon to be Idaho. So, and I can still help other people out in multiple states. We have a great team. We're one of the top companies. We'd love to help you out.
Perfect. Thank you so much. Welcome back to Vivatude. This is Kate Phillips. We had a fantastic discussion today with Rebecca Porter about reverse mortgages. And I'd like to talk about a big picture topic that I think is so relevant right now. We have a retirement crisis going on in this country where there are more and more people, say in their 50s and beyond, who are looking at their assets, they're looking at their retirement accounts, and they know they are not ready. They don't have the amount of money that we're being told that we need to retire. There is a financial planning rule of thumb called the 4% rule, which basically says that if you've got diversified assets, stocks and bonds, that you can start pulling off 4%. If we reverse that, and then, by the way, you would be able to increase that amount every year. The assets will keep growing. You can increase that amount every year, which covers for inflation. When we reverse that, we are looking at, you could say that when you retire, you want to have 25 times your annual expenses in investments. 25 times. So for every $1,000 that you want to pull out of your investments in terms of retirement income, that equates to 300,000 in assets. You want to pull out $4,000 a month, that's 1.2 million. And a lot of people are looking at their accounts and they're saying, I'm like $1 million short. What do I do now? And when I went through my financial storm, I ended up even losing my home when I was caregiving my father during the Great Recession. I ended up discovering what I now call the new retirement paradigm. And in the new retirement paradigm, we are not as focused on the net worth, because net worth is only one way to create income. There are many ways that we can create income. There are many ways we can get creative, and especially using our homes, perhaps through a reverse mortgage, perhaps through other means as well. One of our other Vivatude co-hosts, Lauren, and I have both turned our homes into a midterm rental, furnished rentals, which allow us some seasonal cash flow. And there are many, many strategies. You can go to my website at totalwealthcoaching.com to learn more about the new retirement paradigm. You can probably even opt in to watch a recording about what I call the new retirement roadmap, where it's not all about just acquiring this huge lump sum, but there are many ways we can be creative and solve that problem, not just for retiring, but for creating a life that you don't want to retire from. Once again, this is Kate Phillips for Vivatude. Please like, please subscribe, and we'll see you next time.
And thanks for listening to Vivatude. 4 hosts, 1 each week. We help you revivitude your next chapter, because purpose, passion, and prosperity isn't out there. They're already within you. Brighter, bolder, truer. Vivatude.